Hello, welcome to Super Team. Today we have Devaya is here, Ryder is here, Supreme Leader is here, and we have Akshay. So today, guys, is a very special episode because none of our panelists know what this video is going to be about. And to give you guys context, today's video is a comedic rant by Akshay on a subject called Why Dogecoin Will Lead to World Peace. I'm saying it's a comedic rant before people in comment section start finding dumb loopholes into every statement that you make. It is a comedic rant, but it has a lot of nuggets of truth in it. This is the only context I'll give you guys. On that, Akshay, I'll throw it over to you. How Dogecoin is going to result in world peace. Over to you.
All right, gentlemen. Today we are going to learn
I feel like a shark right now.
sharks. आज हम सीखेंगे how Ponzi schemes will help us achieve world peace. This presentation has 3 parts, यानी कि 3. Number 1. So, in part number 1, I will establish that boomers, who are the oldest generation alive today in charge of a lot of the world institutions, have trapped us in a Ponzi scheme.
Nishan, that's you and me.
I figured.
Yeah, and this is Samay. This is Samay right here.
That's Tanmay showing me
Akshay,
super
what-
chat.
So, as you know, millennials are really the poorest generation, and boomers are one of the richest generation. Like, you see the dark blue line that's going up. The silent generation is the oldest generation, is like the ones pre-Second World War. And so you see the boomers, their wealth has gone up. Now try to find the millennials, my friend.
Is that the
That is
purple
not
line?
yeah, that's not the x-axis.
Yeah,
That is-
it's not. That is actually millennials. Or the poorest.
Hey, how is Gen Z having more money than the millennials?
Gen
No,
X,
that is
Gen
Gen
X,
X.
Gen
Oh,
X,
Gen X.
Gen X. Yeah.
What is Gen X? Is it
Gen
the-
X, one level older than millennials.
I thought that
yeah,
was Gen Z.
boomers are born between 1946 and 1964. Gen X is born between 1965 and 1980.
And where is Gen Z here?
Gen Z is just being
Gen Z
born
is
right
not,
now.
it's-
They have no net worth, bro. They only have trends. That's it. They don't have no net worth.
So, how did we end up here, right? How did we end up in such wealth disparity? This takes us back to the US 10-year treasury. The US 10-year treasury is basically when you lend your money to the safest place, when you put your money in the safest place on earth, which is the US 10-year treasury, you lend your money to the US government. How much yield do you get? How much interest do you get? You get 1.6%. I think it may have changed. This is from an older date. So people, please do not nitpick, but it's somewhere around this range. So, but back in 1982, you got something like, 14%.
Oh.
Right?
Correct.
So when they created all these retirement funds and schemes and social security in the 60s, 70s, 80s, they realized that to successfully retire the boomers, you have to produce a target rate of 7%. They were like, yeah, the 10-year bond produces 14%. Nobody at the time contemplated that it'll produce 1%. In fact, in Europe, it's negative now.
So if you give your money to government, less comes back. Okay.
After so many years.
Yeah.
Yes.
Yeah.
And do you know why that is? Do you know why people still choose to do that? Because if you put in a bank account, you have what is called an FDIC insurance, which only protects it up to $250,000. Anything beyond that, if your bank goes up, it's all the money is gone.
Gone. Yeah.
So this is the reason. What did they do? How to produce this remaining 5.5% here? Guess what? They started a Ponzi scheme. They went out and started over allocating to riskier markets, right? More in the stock market allocation. They're allocating more to risky niches like venture capital. So if you look at 2006 versus 2016, this is how much funds have been allocating to alternative investments because they have to dump the bonds and go buy something else.
Now this is why I'm assuming whenever stock market go up, startups get funded because this balance has to be maintained, right? So if in your portfolio amount of stock returns is high, you want to allocate to alternate again to keep the pie chart in the same structure. So whenever rebalancing. So whenever stock market go up, new startup get funded. That's why there are these people say कि हवा आती है ना कि अभी बहुत पैसा है मार्केट में, अभी उठा ले जो भी स्टार्टअप है फटाफट रेज कर. Because all the LPs are sitting and calling venture capital saying that bro I got to deploy. मेरा stock market का return ज़्यादा आ गया. I need to pass it on into alternative investments.
Wow, so basically this is like, the pension fund, which is boomers, old people money, getting us fucked over so we can never have a pension fund because we won't have enough money to have a pension fund.
Well, they don't have enough money to retire their own boomers. If they don't produce 7%, they're going to default on their pension obligations and boomers won't be able to retire. So someone has to subsidize someone else's living, in this world.
I think when you die, your money should be given randomly to somebody. I think that will just get world
Presidential
peace.
candidate we have.
Guys, I'm dying. Please leave your wallet ID. Top 10 people will get my wealth.
airdrop my net worth when I die.
So those alternative investments have gone up dramatically since 2004, right? It means it has led to more venture capital, which has led to more mediocre venture capital firms, which have funded more mediocre startups. How is it that anybody with an idea and a laptop and a hoodie is raising money? And something should be wrong about that, right?
Uber for shoe laundry is also being funded. Anything is being funded.
So all these pension funds that had to generate 7% yield have allocated more and more to venture, because they realized if we invest $10 million in a Series A startup, we can potentially, that company can go public and we can make that $10 million into $1 billion. So they invested more and more. They over-invested in venture capital, which has given us all this good stuff, obviously, great startups, great jobs for our generation. But it also means that there are a lot of mediocre venture funds, a lot of loss-making startups that are never going to be successful, but they have just gotten funded because Nishant Bhai funds the first round and then passes it on to Samay. Samay is like, we're going to go into Series A, and marks up Nishant Bhai's round. And then Samay passes it on to Devaya, who marks up Samay's round. So,
Is it like an MLM?
yes. Except we don't call it that. There's all this jargon, and it's just, did you realize how boring the last 60 seconds have been? Think about that. But if you're talking about NFTs, we are like, who are we dumping on?
It's basically
Like the Zoomers came up with. We didn't even come up with that. It's so bad. The millennials are wrecked by both boomers and Gen
Z.
Like a sandwich of disappointment and lack of future. For those who don't know how venture fund works, it's basically limited partners, which are pension funds, educational endowments, right? They put money into a fund with general partners of the fund run for them. So VCs don't have their own money. They're running someone else's money. And that someone else is a pension fund desperately looking to make 7%. So now they're putting more money into venture, more and more venture funds, more and more startups. All right. Then what happens? The round size of these startups start to go high. The rounds start getting more and more expensive. More and more people are buying startups. So you're pricing in future growth and future success into current round, right? Look at this. Series C and Series D have gone up by
dramatically.
3x. They've gotten more expensive, which means when they're private, and remember, in this case, you and I can't invest in any of this, right?
Who are eligible investors?
They are accredited investors who have effectively a minimum net worth of $1 million. And these companies have remained private for as long as humanly possible. They've raised Series G. Okay, this is not even on that thing, right? They've remained private for years, 7-8 years. They're going public later and later in their life cycle, right? Which means there's very little growth left after they go public. Why is that important? Okay, look at this. You would have heard of SPACs last year, right?
Can you explain what SPACs mean?
Yeah, it's a special purpose acquisition company. Basically, it's a boring way to describe something where you put in money and you decide, and you haven't decided which company to buy it. And then you trust the fund manager of that fund to go out and make a deal to take a private company public by buying a large percentage of their shares.
तो बेसिकली समय जैसा अभी बहुत सारा कंपनी सीरीज ए बी सी डी ई एफ करता है, उसके बाद वो लोग आईपीओ करता है, राइट? सो व्हाट स्पैक्स डू इज दे आर एबल टू टेक अ कंपनी पब्लिक अर्लियर इन दिस साइकिल, लाइक आफ्टर सीरीज बी सीरीज सी ओनली यू कैन go to IPO.
Okay, so then what happens? All these guys, so basically boomers are marking up these funds, right? Series A run by one boomer, Series B by another boomer, Series C by another boomer, and finally they go public. And who are they dumping on?
Retail.
Retail, right? You and me are the idiots buying these stocks. This is like the IPO performance of some of the companies after they've gone public. On the left side is a special mention to Jim Cramer of all the stocks he's asked his audience to buy in 2021. And that's how much they're down. This is basically BitBoy crypto of the regular financial markets.
Minus 70% to 50%. Wow, negative 53% is his best performing suggestion.
Wow.
We should make
Right?
this guy to ask us which stocks to buy and then just buy the other ones.
That's the inverse ETF. Whichever one he says, you short that.
Yeah.
So, what are we doing? We are already one of the poorest generations. They're marking up all their deals privately and selling at near all-time high prices to us, an already poor generation that does not have investment options. We can't buy bonds. What are you going to do? Get like 2%, 6% interest when inflation is 7%? No, you are not going to put it in FD because Ankur Warikoo has basically published a PhD thesis about why it causes World War III or something. So like that's not a thing. And then real estate, nobody can afford a house. Okay,
Unluckiest
so
generation.
obviously there's like the unluckiest generation, poorest generation, blah blah blah, right? I'm just showing different ways of how poor all of you are. Right? So this is one little graph. One other way of seeing is, okay, fine. You know you're supposed to buy assets, right? You're supposed to allocate money to assets, not to appreciating assets. All the jargon. Okay. In 2008, it took you about 40 hours to buy a unit of the S&P 500. S&P 500 is the index in the US, right? So you have to work 40 hours of labor to buy 1 unit of an asset, of basically that represents the stock market of the US. 2020, you had to work 120 hours to buy the same unit of asset. Why do we invest, right? We invest in assets because you hope that one day you can stop working because that asset will start paying out. Like it's effectively future savings. Buying your future time back effectively. You're buying freedom. When you buy a stock, you're not really like, oh, I want to own Netflix. You're basically saying, I'm going to invest in this. It's going to go up over a period of time. And then in 10 years from now, I can just take 3 years off and buy 3 years of my freedom back because I'll still have an income or I'll have money and savings. So the price of freedom is what you see on this chart, right? It's gone up by 3x, pushing everyone where you have to work a job. You cannot stop working for a couple of months because guess what? The price of freedom is too expensive. And then so everyone's response to that is, oh, work for 20 years and in the 21st and 22nd year, you're going to have freedom or whatever this. Except the problem here is that the value of your time goes up as you get older, right?
जितना मेरे तो कुछ खुश करना आया था यार यहाँ पे बीटी हो रहा है हर एक presentation के बाद it gets sadder and sadder. I feel like calling my dad and like, hey dad, is everything fine?
Your dad is boomer. He's okay. Trust me.
You have to call yourself and check on yourself. Okay, so what has happened now? Basically, now we decided to change the definition of money itself. This is the response of the millennials. Okay, this is the revenge of the millennials, part 2. Okay, here we're like, okay, screw it. We can't participate in their system. We're never going to win. So we're going to create our own. And we just change the definition of money itself. Change the definition of the underlying currency itself and memed a new currency into existence, memed a $1 trillion asset into existence, which is Bitcoin. Effectively giving boomers and the world pure collateral asset, just like gold. A bunch of early people bought it who are not the boomers for a change. It's our generation. And then they are now selling it to the boomers.
Institutions.
So the first time institutional support is coming. What does that mean? Well, it turns out the boomers are buying millennial bags, right?
Somewhere when Gen Z is buying Bitcoin on Robinhood, okay, and JP Morgan is buying later than Gen Z, it's essentially Gen Z selling to JP Morgan. And this is
retail front running Wall Street.
Yeah, the retail for the first time is front running Wall Street. It's never happened that everybody on Wall Street doesn't own an asset that retail already has. That's rare.
Now what's happening is, now Bitcoin was always public to begin with, right? Now to ensure that the Ponzi keeps going, where the big institutional money allocates to VC, there are a bunch of VCs here, a bunch of startups that are eventually taken public and sold to retail, right? So you have institutional money, you have many VCs, you have many startups, and then you have retail money. Now what's happening is the smart retail is exiting this Ponzi because they're like, well, I don't want to buy and get dumped on. So smart retail is exiting and buying Bitcoin, which has produced 100% compounded annual growth over the last, or 200% I think in the last 10 years. Smart institution is also exiting, saying, I don't want to keep on running on this treadmill where I have to find a new VC every year, and that new VC has to go and find a new startup. This is why whatever Uber for laundry is getting funded in Indore or whatever, right? Because you have to you have to deploy this capital once you raise it. So smart retail is exiting here. Smart institutions are exiting. And so if the beginning and the end of the Ponzi start to exit, the middle also crumbles. Right? And the middle is all the mediocre venture capital funds, all the mediocre startups are going to not be able to raise money in the future because the capital allocator, a smart one, would look at it and go, I can either buy Bitcoin, right? Which just does nothing, just absorbs all the excess money in the system and continues to go up. Or I can invest in this really risky thing and bet on the founder executing it and bet on the company going public, right? I'm not a forced buyer of risk anymore because I now have an exit.
This was supposed to be a comedic rant, dude. What the fuck are you doing?
I don't know. Why are we having this conversation? My introduction on this channel is just like, it's not even my expertise. I didn't even study this. I don't even know what I am doing anymore. I don't have a personality that I like on this channel.
He's just coming and ruining the vibe.
All right. So now for the final part of this presentation. So look, there's all this thing, right? Oh, crypto is a Ponzi scheme, and it's like it's a pyramid scheme, MLM, all of this stuff. That's literally exactly what the stock market is, as we just saw, right? In a world where interest rates are very low and money is being printed, where do you put it? You put it in things like, what is the value of a stock? It's just whatever you and me sit in a room and decide is what it's worth. Except that in the stock market, it's a bunch of old crusty people in suits saying things like EPS and like whatever, like PP ratios. And on the internet, on an internet native thing, it's just a bunch of monkeys and apes saying like moon or like,
Hordle,
right? It's whatever.
NGMI, WAGMI.
Like so this is actually serious, right? Because one of the things that causes civil unrest and violence is actually inequality in society, right? When the top 1% owns over 50% of assets and the rest of the population owns under 50% of the assets, that's insane, right? That's what leads to revolutions and civil unrest and things like this. Even if you assume crypto is some sort of Ponzi and Bitcoin is some sort of Ponzi, even if you assume this, right? Look at that, right? This is happening in every country, right? Occupy Wall Street happened in the US, and this is like the picture on the right is from the Yellow Vest protests in France. And now the thing with crypto is even if you assume it's a Ponzi, it's peacefully transferring wealth between the richest generation and the poorest generation to the poorest generation, right? As opposed to getting involved in like these civil unrests and violence and things like this. So in other words, I guess what I'm trying to say is Dogecoin helps ensure world peace. And this is one of my favorite videos that we can now watch.
Video,
What a video.
What a video. It's like everything is a Ponzi, just get in at the correct time, go out at the correct time.
Whenever I make any video about crypto, or if I make any video, they'll be like, hey, this is Ponzi. Hey, tu kya bech raha hai? I'm like, bro, you're just a guy sitting in one Ponzi telling a guy sitting in another Ponzi that your Ponzi is a Ponzi. I'm like, सब एक ही game खेल रहे, which is buy cheap, sell expensive, and enjoy your money. On that note, thank you for joining us for today's episode. I hope it was entertaining and engaging, and I hope you guys learned something. Akshay, thank you so much for this presentation, and see you guys next time.